Welcome back. You're watching us here on Markets Today, a show where we talk about the way markets fared today. We've been speaking about how the mid-caps outperformed. We spoke about, the gas stocks being in focus as well as some of the auto stocks, including the likes of Tata Motors. But let's talk about the other headlines that we're tracking for you. And it is the real estate pack. Godrej Properties and Sobha surged in trade after both the companies reported strong bookings and collections in the fourth quarter. But meanwhile, Nifty Realty, the index was up close to 4% in trade for the second day running, and this after the RBI decided to pause, their interest rate hikes. So that gave some sort of relief to all the real estate players. Sonal joins in with the details of Godrej and Sobha. Sonal.
Oh yes, it is. For both the companies, they have reported record high quarterly sales this time around. So let me start with Godrej Properties first. Sales value, which is up 24.5% on a quarter-on-quarter basis to come in at 4,000 crore rupees. Sales volumes are higher as well, 25% on a YY basis at 5.25 million square feet. Collections, a big surge on a quarter-on-quarter basis, up by 127%. The good part is that the company has surpassed their FY23 booking guidance of 10,000 crore rupees by 22%. So right now it stands at 12,232 crore rupees. They say they have a stronger launch pipeline in the current year that they've not seen before, and that is something which is exciting the street as well. Additionally, there is a Motilal Oswal upgrade that has come in for Godrej Properties. They have upgraded it to a buy. They say that company has reported a four-fold jump in their sales to 8,000 crore rupees till the last financial year, and this was driven by over 100 million square feet of project additions that the company did. Market share has expanded to 8% versus 2%, and they estimate that company will be able to add 38 million square feet of projects in coming years, and company is also targeting 20% growth in their pre-sales in next 4 years. That could take it to 20,000 crore rupees by FY26. They expect the annual launch run rate to double to 20 million square feet. These are the growth drivers they think is going ahead for the stock. For Sobha as well, it was a good quarter. Bengaluru saw sales flat on a YY basis. NCR saw a dip, but Kerala saw good growth, and that is something which led to good growth this time around. In quarter 4, sales value is up 26% on a YY basis. Sales volumes are up 8%. Realizations too went up by 14% for the company. And as I said, Bengaluru was flat. NCR was lower a tad bit, and Kerala was higher this time around. Company said they launched the first project in Hyderabad, and overall launched 3 projects with saleable area 1.06 million square feet. It's a good commentary and good update, something that the street is liking.
So now, thanks a lot for that. With that, we go on to the fifth and the last, but not the least important headline of the day. And this is the biggest private equity deal that took place in the healthcare space, where Singapore-based investor Temasek Holdings acquired a controlling stake in Manipal Hospitals for over $2 billion, valuing the company at over $5 billion itself. Ekta joins in with the details about this, but more importantly, the rising interest of private equity in Indian healthcare. Ekta.
Thanks for that. Well, in what is one of the largest deals which have taken place in a pan-India hospital company, Singapore-based PE fund Temasek is buying controlling stake in India's second largest hospital chain, Manipal Hospitals, for over $2 billion. Temasek already owns 18% stake in the hospital and will be buying an additional 41% from promoters and others for around 16,400 crores. Manipal, with a bed count of around 8,300 and 29 hospitals in 16 cities, is India's second largest pan-India player after Apollo Hospitals. The company, which is looking to ramp up its bed count around 10,500 in 2 years, has seen revenues more than double to around 4,000 crores and margins expand to around 24% in FY22, valuing the deal at around 10 times FY22 sales. Now, talking about valuations, in the past 5 years, valuations have risen as much as 8x in the hospital space. 2018, for example, saw 2 pan-Indian hospital companies sell stake, Fortis and Max Health. Fortis, interestingly, which was once bid for by Manipal and sold to IHH, another non-Indian promoter, for a valuation of around 13,000 crores, currently has a market cap which is almost 50% higher. In the same year, KKR picked up majority stake in Max Health for a valuation of just around 4,265 crores. The current market cap is over 42,000 crores. KKR also exited Max with a 5x gain last year. Valuations for Indian hospitals, experts say, really pivoted during COVID-19, which benefited, for example, from better improved long-term structural drivers such as better medical awareness, insurance penetration post the pandemic, and medical tourism reverting back to normal. and Manipal's valuations have just about almost doubled in the past 2 years, is a good indication of this interest. In 2021, National Investment Infra Fund or NIIF invested around 2,100 crores for around 8 to 9% stake in the company, valuing it at around 25 to 26,000 crores, which has now almost doubled to around 40,000 odd crores. And this is reflected in hospital stocks too, which have risen anywhere between 25 to even close to 100% since the start of FY22. However, while hospital stocks have risen and valuations have expanded, based on the 10 times FY22 market cap to sales valuation ascribed to the Manipal-Temasek deal, a quick comparative check indicates there might just be room for further up move for a few of the current listed hospitals. Lastly, this deal also points to a trend of PE funds doing control deals in the Indian healthcare space. Besides KKR Max, the other recent examples include the Ontario Teachers, Sterling Hospitals Upward PE, and the Samara Marengo platform as well.
Ekta, thanks a lot for putting perspective on that for all of us. The biggest private equity deal in India and a lot of private equity interest in the healthcare space in general. With that, we're out of time on this edition of Markets Today. Thank you so much for watching. Stay tuned to CNBC TV18.